Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, there was much upside excitement on Thursday after the Australian bulls took the market to the challenge to 63.55, and after at least 4 attempts at this region has ended up posting a long-legged doji. A long-legged doji is one of the candles that represents indecisiveness, and therefore the market is now looking for direction into the Friday session. Nevertheless, with the bullish divergence that's viewed from the MACD, mixed RSI has actually put a little bit of a softer approach into Friday's price action. However, any pullback towards the support level of 62.45 should find demand, or even towards 65 should find a rejection like we previously witnessed from the posted Japanese candlestick hammer. I'm not abandoning the top side challenge, therefore I do feel that there will be another at least 1 or 2 more tests towards that top side, and if breached does give further scope towards the region of 65 cents. See how the market closes for the end of the week, and if it's more closer towards that top side level, then we should see a stronger Aussie into next week. The euro also was a little bit hesitant in taking the challenge to that yearly down channel after the market got the jitters overnight when US Federal Reserve Bank of Philadelphia President Patrick Harker said higher interest rates had done little to keep inflation in check, so more increases would be needed. He went on to say, "We are going to keep rising rates for a while," as the central bank officials remarks from the speech in New Jersey, given our frankly disappointment lack of progress in curtailing the inflation. I expect we will be well above 4% by the end of this year, he went on to say. The market is expecting another 75 base point rate hike in early November and follow that possibly with another one in December. This has also strengthened the US dollar. Putting that aside though, looking at the technicals, we can see that the MACD is positive for the euro, and we can see that the mixed RSI for the euro pattern from the dailies should see one more test at that top side. However, any pullback should find support around 96.75 to 80. The dollar yen has now claimed that 150 area, and against the US dollar posting a 32-year peak. It is quite surprising the fact that the Bank of Japan and the Ministry of Finance said they may intervene at these levels. At the start of the week, Japan's currency diplomat said authorities would be firmly responding to excessive currency fluctuations, although with the hawkish comments from the Fed officials overnight has put a little bit more strength. I'm very careful on how this market's going to turn out in terms of the next few days, due to the fact that there isn't any bearish candles since 143.5, and all bullish candles. No doubt that there's been little profit taking, and there will be most probably something like this whipsaw price candle and a drop of about 5 big figures if we see the BOJ intervening. So still be very much on your guard. We are extremely overbought and have been for some time now, so it is warranted that it's very, very near to this downward significant turn. Sterling, well, the market was a little bit rattled overnight after the UK Prime Minister Liz Truss announced his resignation after 45 days in power. Supporters of Boris Johnson are backing the former British Prime Minister to make an extraordinary political comeback following the dramatic decision from Liz Truss's resignation. Looking at the sterling, though, we can see the market is somewhat heavy, and therefore, at present, since the retreat from that high 114, still keeps on the target of 110.60 before the market rallies, probably about 300 to 400 points to the top side. So don't get too bearish and look for the pullback before the rally will be ignited. Viewing gold, the market still weighing on the support level of 1,621 as the bears sink their claws in deeper. Now could see a possible break. If so, that would give further scope to the downside and bring in a target or the region somewhere around 1,515 to 1,565. Given this bearish technicals, and the fact is that we've been negative since the 1,700 mark, that we could see further risk And looking at the monthlies, you can see where the trajectory looks too. And therefore, we are a little bit oversold. But I still feel there is a little more in progress of stop losses being triggered. Having spiked above $85 a barrel, the market is a little bit weaker and still a little bit mixed as well from the price action. Unless we see a close above 85.40, that is from New York, then we would see a move back at potentially to $81 a barrel. But a close above 85 would bring us the next target of $88 a barrel. Well, that wraps it for the week. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new weekend.